Jet Airways has landed itself in a very messy situation as the country's oldest private airliner struggles to manage costs and take on growing competition at the same time. This, even after Etihad came on board just a few years back. So is the full-service carrier proving to be too old to keep up with its younger and trimmer peers and eventually lose out? Or can it turn around, and can the space provide the tailwinds for the same? Joining us right now to talk about it is Jagan-Narayan Padmanabhan of Crisil Infrastructure Advisory and an aviation sector veteran, Jitender Bhargava. Gentlemen, both of you, good morning and thanks so much for joining in. Mr. Bhargava, I'll start off with you. Pain points for the space at large, yes, because what the last 6 months or calendar year 18 has shown that despite strong top-line growth, crude remains the most important variable. Is Jet in a more peculiarly difficult position than the others, or is the whole space under a bit of a cloud right now?
You see, since everybody buys ATF from the same sources at the same rate, it's the economics of each airline that determines. The only common factor engulfing in the entire sector is the low yield that you have, the earnings per kilometer of passenger flown. Now, India ranks among the lowest as far as the world aviation is concerned, as the yields are concerned. So if you keep selling a seat below the cost of producing a seat, you're not going to be making much money. Low ATF prices helped them make marginal profit in the last few years. 20% plus growth in the market, and yet you are in a crisis situation. What do you do about it? Now, I have not been able to understand the total economics. They need to come out as a listed company in public domain and put the facts. You go to the extreme step of saying, I don't have money to fly for more than 60 days, denial. Then you say, I'm going to introduce a pay cut of 15 to 20%, 25%. And then I believe again, after some meeting with the employees, they've decided to withdraw. Now, if the situation is really, really critical, how are you going to look at the future and assure the shareholders that Jet Airways will continue to flourish? There's no denying low-cost carriers are taking away the market. Legacy carriers, including Vistara for that matter, Air India is a totally different kettle of fish, is different. And if Jet Airways is going to price the tickets at the same level as Indigo, which does not provide food and very many other facilities, right? How are you going to break even? Now, somebody is going to look at all this and say, why? Are our airlines immature, that they're not taking a long-term perspective? They're taking only a short-term perspective. How do I look at it, garner my market share, protect my market share, and not look at the economic viability? Well, somebody has got to do rethinking on the subject.
Yeah, but the question, Jagan, would be that does the sector dynamic provide the room for a company like Jet Airways to do this? Because they may well want to price their tickets higher because they are a full-service airline.
That's right.
But for me, for an example, I'm agnostic about which airline I want to take. I go to whichever app that I go to and look at the lowest price. Is that now proving to be a stumbling block in an era of higher crude prices?
Absolutely. I think from a conscious customer like in India, everybody looks at price at the starting point. And what's happening is airlines are also falling into that part of it and not really pricing their services appropriately and giving a differentiation in terms of what comes across. Just to extend what Mr. Bhargava was mentioning, the average ticket price has actually decreased from last year to this year. It was hovering close to 4,200. It's come down to 3,900. On one hand, you have had a price increase in the ATF part of it, which is like close to 50% in the last 6 months or so, and the price and the revenue part of it has decreased. So that's a double whammy as far as the airlines are concerned. And in terms of market share, everybody wants to hold on to the market share and really don't want to let it go. Okay, so it's a question of who blinks first. And the ability to hold on to it is what is kind of dictating things now. And hopefully, some level of rationalization of prices will happen. And once that happens, then we will see a northward bound as far as the revenue is concerned. So at the average, seat kilometer pricing was close to about 3.7, 3.8. Okay, and the cost was closer to 3.2. With ATF prices going up, this is now kind of completely merged together. And it's like 3.7 and 3.8. In fact, the revenue is lower than the cost part of it. So all of this is kind of saying that you need to take hard steps, move ahead, increase it. There could be a dip in terms of the people moving from one place to the other. But that's needed for the welfare of the airlines to sustain.
Okay. So, I'll give you guys a bull argument that came in, and purely from an investor's perspective. I know you gentlemen are not essentially into the investment advice, but just wanted a perspective. Back in December, I remember a conversation with somebody who was bullish on the aviation space, and he happened to mention that the yields are just so high that the airline companies don't need that. It's better to not have so much of passenger load factor, bring it down a bit, but take the prices higher. Now, the sector tailwinds are such that airlines might be flying full, but the ticket prices, as Jagan and you both referred to, Mr. Bhargava, have come off. Is it prudent? Is this one quick way of ensuring that the profitability is intact? Bring the yields down or take the prices up, let the yields come off a bit, you will still be better off on the revenue and the cost management.
Yes. Since you do not have control on much of the cost factors, interest rates, airport charges, ATF charges, there's very little that an airline can do as far as the costs are concerned. The only way is to enhance your the revenues, selling ticket at a higher yield, to look at it. Now, what do you need? A mature set of airlines. You can't say today Jet Airways is in a crisis, so Jet Airways will undersell to protect its market share and I will reap the benefit. It will happen to all airlines because it's a fortunate factor for the Indian aviation that no mega carrier has come into the market in a large way, barring Vistara. If they had come in and tried to, and with deep pockets, with no cumulative losses in their balance sheet, they would have been underselling it. So this has been a good market growth. All that is required is maturity on the part of the airlines, that if you keep selling seats below the cost of producing a seat,
it won't work.
The writing is on the wall. Read it now rather than later.
So do you think the space as a whole will take the ticket prices up at some point of time? Will they have to?
You see, there is a body called the Federation of Indian Airlines.
Right.
Now, there is no reason why that body cannot play a role and say, look, it's suicidal for all airlines. Somebody will get it in now, somebody 6 months later, 1 year later. Be mature. You have international examples in front of you that many airlines go under when you get into a mad rat race.
Sure.
Don't get into it, behave maturely, ultimately survival. Now, why would a person like an airline be immature to the extent that I'm not looking 2 years from now, I'm looking at today to protect my market share?
Sure.
So I'm very, very sanguine. You can't look at government. Government could have said, okay, airport charges, we can reduce it a little. ATF sale tax can go down a little. It'll only give you marginal relief. At the end of the day, what matters is at what rate am I selling tickets?
Okay. That's the central
and
point
India
of Mr.
is a price-sensitive market. People would lap it, the lowest thing. But question is, how low can you get?
Oh, yeah, that's an interesting question. Okay, if you want to dwell on that a bit, but the other part two of my question was, if you've looked at all the three, do you believe that the low-cost carriers, Indigo and SpiceJet, are in a better off position than Jet Airways? I mean, if from an investor's perspective, if I'm looking at the space and thinking which is the worst of the three apples, would you believe fundamentally, as of now, ceteris paribus, Jet Airways looks worse off than the other two?
I wouldn't get into that specific.
No, not as a stock, as a business.
Yeah, as a business perspective, yeah. So I just want to kind of dwell into what he was saying. Typically on the revenue perspective, if you were to look at it, the 0 to 15 days, okay, is when you get good yields as far as the ticket sales are concerned. Even in that case, like they have gone and recorded and Indigo has said, that they have not been able to inch up the price. So it's been really competitive even on the 0 to 15 means it's business traveler, last minute somebody wants to go, he's price agnostic, he just wants to move from one place to the other. So I'm just trying to say that that's the level at which the pricing has been kept at. So if it is planned before that, then you can kind of shop around and see where is it I want to go and do that. But in 0 to 15, I want to fly at 8:30 and do I have a flight and I want to move? No, even at that point in time, they've not been able to do that part of the whole thing. Is Jet Airways worse off than Indigo or SpiceJet? That's not the case. I think the overall entire sector is been taking a hit. It's because they've not been able to pass on the cost onto the part of it. I mean, kind of a quick analogy. This is what happened in the railways perspective. I mean, it's quite a bit different. But what happened of the second and the third AC part of it? The revenues on the top part of it, the airlines were competitive to this, and they were able to wean off from the railways to here. So if the price is going to increase significantly, then the consumer is going to move ahead and say that I will choose going back into the second
think so?
Yeah, I mean, that's where the whole growth has happened. If you were to look at the volumes, what has happened for the railways, the second-hand AC has taken a huge hit, and they've all moved to here. So if the prices goes, 15% is something which is palatable at best. Anything moving above that, then that will be a hit. I'm saying what's playing in terms of the airlines and what they would look at it. So that's the price point at which people will shift from one mode to the other. And what happens generally is very difficult from a behavioral pattern to get them back out here. So that also plays into in the minds of the airlines, that how do I get them back? I've got them back after long years. If I increase my prices significantly, they're going to change the pattern in which that they go, and they go into the railways, then how do I get them back out here? So that also is becoming an aspect to look at.
So then what? It's a no-go. Airlines are caught between a rock and a hard place. I mean, they can't increase prices because they likely lose out on traffic. But just the final word on this, Mr. Bhargava or Jagan, or quick 1-minute answers from both of you. The way out, I think Mr. Bhargava said that pricing needs to go up. Even if it leads to some losses on passenger traffic, Mr. Bhargava, you think it will be a win-win for the airlines?
Absolutely. You see, because since passengers have got accustomed to low fares, they will keep looking for it. The question is, how low can you get? Ultimately, what matters is the economic viability of an airline.
Right.
So you've got to be realistic, be mature enough, and said, look, I'm going to look at 6 months from now, my airline's future, rather than say, I'm going to be selling tickets below the cost.
But then you're talking about saving the airline and not about growing. You believe growth will still happen?
Look, you can't grow at the expense of profitability.
Sure.
Because you will grow beyond a certain point, like Kingfisher did. Kingfisher's a living example in front of us, became India's largest domestic player. But then what happened?
But we are not suggesting jet is down the good route, right?
You see, look, if you continue and disregard the cost factor, where do you keep getting the funding?
Okay.
Will you keep selling stakes, and you can't sell a stake beyond a certain point then? How do you go future? Somebody is going to look at it and take a realistic, real view. My priority is to ensure my airline survival.
Okay.
What is needed, I will do it. You are not a government company and said, okay, government will bail me out.
Okay. Gentlemen, afraid just out of time completely, but thank you so much, both of you, for joining and giving us different perspectives at that. And boy, I tell you, the aviation company, at the risk of repeating myself, but the aviation space caught between a rock and a hard place. Let's wait and watch what happens to these airlines over the course of the next 3 or 6 odd months. Gentlemen, thank you so much for joining in today.